Why did one of the most valuable technology companies in the world spend $7 billion on a venture that seemed destined for failure from the beginning? Imagine this. Brimming with money and ambition, Microsoft announces in 2013 it is acquiring Nokia's mobile phone company. The aim is to control the market for smartphones. Just a few years forward, the deal is a smoldering ruin. What went on? How did two software giants come to produce one of the most infamous disasters in corporate history? To grasp this, let us go back to the early 2000s, when Nokia was unquestionably the mobile phone king. From boardrooms to classrooms, their devices were omnipresent, and their classic ringtone was almost the soundtrack of a bygone age. But Nokia staggered as the smartphone revolution started to take shape. Introduced in 2007, Apple's iPhone changed the definition of what a phone might be. Android, with its open ecosystem, was fast becoming popular in the meantime. Reluctant to change its antiquated Symbian operating system, Nokia quickly became irrelevant. Nokia's new CEO by 2010 was former Microsoft executive Stephen Elop. Announcing that Nokia would switch to Microsoft's Windows Phone operating system, Elop took a daring step. Symbian would be abandoned. It appeared at the time like a reasonable cooperation. To contend with Apple and Android, Microsoft needed a hardware partner. Nokia needed a software lifeline. The drawback was that Windows Phone was already having trouble becoming popular in an iOS and Android-dominated market. It felt as though one was wagering on a horse already losing the race. Fast forward to 2013, Microsoft opted to purchase Nokia's phone business completely, while Windows Phone still ranks third in the smartphone OS competition, and Nokia's market share is falling. Microsoft paid $7.2 billion for not only the hardware company, but also a pile of issues and a legacy of invention. There was initial hope. Microsoft positioned the Lumia phone range as the mobile future. They lavished money on marketing, and the device's sophisticated cameras and build quality won plaudits. But one very clear problem was apps. More precisely then, the absence of these. Comparatively to iOS and Android, the Windows Phone App Store was shockingly understocked. Given a platform with such a small user base, developers were reluctant to commit money, which set off a vicious cycle Microsoft was unable to stop. Microsoft's merger of Nokia's activities proved uneven in meanwhile. Cultural conflicts between the two businesses hindered development, and the change turned off many of Nokia's best engineers. It turned from a flawless merger into a bureaucratic maze. By 2015, the writing was on the wall. Microsoft declared large-scale layoffs, slashing thousands of former Nokia staff members. Admitting the purchase had fallen short, they wrote out almost the whole acquisition value. Microsoft quietly left the smartphone market as the Lumia brand disappeared. Consequently, what went wrong? Microsoft first undervalued the degree of ingrained Apple and Android presence. Second, they exaggerated Windows Phone's attraction to developers as well as consumers. Ultimately, clashing ideas and inadequate implementation dogged the merger itself. Still, this has a more general lesson. The Nokia merger was a strategic error that exposed Microsoft's inability to fit a mobile-first world, not only a financial loss. Although the company finally made money in sectors like cloud computing and business software, the Nokia disaster is nevertheless a lesson on the perils of pursuing market share without a defined strategy. Could things have gone differently? Maybe. The narrative might have ended differently if Microsoft had concentrated on developing a really competitive operating system before acquiring Nokia, or if they had doubled down on Android instead of hanging to Windows Phone. Having stated that, appreciate you watching until next time.